PDAC 2022 in Toronto and Commodity TV with you here on the online version. Unfortunately, as we cannot be in Toronto, we are looking forward now to talk to Sandeep Singh, the CEO of Osisko Gold Royalties. Welcome and good morning to Toronto. How are you, Sandeep?
Hi, Jochen. I'm good, thanks. We're missing you here in person, but good to talk to you over the line.
Yeah, unfortunately, it was not possible due to some family constraints, but at least we can talk, and that's very important. Next year, I promise in person, and I owe you a dinner, that's for sure.
Look forward to it.
Me too. Super. Okay, let's get into medias res. Osisko Gold Royalties, one of the leading royalty and streaming companies in the world. It's good to have you here for an update, but I think first we should maybe talk why the royalty and streaming model has a lot of advantages in a world now with inflation, stagflation, supply chain problems, disruptions. I'm sure you have an opinion on that.
I do, and look, it is the part of the cycle that we will do best in as a royalty company. For all the reasons you mentioned and others, quite well that we don't have the OPEX and CAPEX inflation that our mining partners do. This is a period where everything is costing more. It's tough to kind of gauge what that's going to look like into the future. Supply chain issues are definitely a part of that. Labor is a part of that. Energy, I think, is the biggest issue affecting inflation in mining and most parts of business. And we're immune to that. We also have so much diversification. You might remember we have 20 different producing assets this year underpinning our guidance that will grow every year. So for a company our size, that's a lot of diversification. Something goes wrong in one jurisdiction or on one asset, that gets leveled out by something else. So that's those are some of the reasons where on the royalty side we do provide that inflation protection. We provide the gold exposure without as much of the volatility. And I think in the world we're living in right now, I think that's always been appealing to investors. I think it's only going to be more appealing, frankly, going forward.
Yeah, absolutely.
And as a backdrop, I would say, I think that, we're seeing a lot of people are still underweight gold, a lot of generalists especially, and they don't want to pick and choose, this mining company, this mining asset, this jurisdiction. And so when they finally make the decision that they want to own some gold exposure, they want some diversification in their portfolio, they start with royalty companies and then they work their way down.
Definitely, maybe some physical, because we saw also,
of course.
In the last, I would say in the last 10 days, Bitcoin faced a big hit. I just saw it at $20,000. My goodness, that's tough.
Yeah. Look, it's tough. Yeah, I guess on a relative basis, we could be doing worse in the gold sector. But the problem is, when things are bad, everything that's liquid gets sold, and I think we're certainly feeling that as well in the gold space. On the equity side, and equity is an equity, but I think eventually we'll come out of it. Bitcoin is interesting. I think there's been a lot of reasons why people haven't held gold in the last kind of 2-year period. If you take a step back, first it was inflation wasn't real, then it was inflation is transitory, then it was Bitcoin or is digital gold. None of that was true. None of that stayed true for very long. I think it will have its purpose. It's definitely an interesting asset class, but it just shows you that I think gold has served its purpose for a long time for a very good reason. And I think we're in a space where that's going to continue to hold and frankly become more and more true.
Yeah, definitely. And it's always the matter. Real values will stay forever. That's
hard
for sure.
Assets.
Hard assets. Exactly. Yeah. That's what I wanted to say. Yeah, super. Let's come to your company and some numbers, of course, always. You raised a lot of money in the first quarter. You had still a very good quarter in the first quarter, despite some market challenges. And you also did some nice deals like the Trixie Mine TINTIC stream here. Please elaborate on that. How did that come? I think it's fantastic.
Yeah, look, there's a lot of good things for us in Q1. It was a very active quarter for us. Maybe I'll take a step back. There's a lot of pieces there. First, you would have heard me say, Jochen, to you and maybe to others over and over that in 2020 wasn't the right time for the royalty sector to really be deploying a lot of capital. In years like 2020, when the equity markets are wide open, debt markets are open, there's a lot of capital chasing relatively few names. That's not when the royalty companies do their best deals. We are, or should be, frankly, a little bit contrarian and provide our capital when it's actually needed. So you would have seen us take a bit of a step back in 2020, do some smaller deals, still good value, things that matter to us, but we didn't really chase and overpay for assets that were just frankly getting riskier and riskier in our opinion. That started to change in 2021. The equity market started to close to other people, and that's when we get active. And we were pretty busy building up a pipeline of opportunities in 2021, and then we acted on it quite significantly in Q1 of this year. TINTIC is one of those deals, which I'll talk to you about. That was smaller for us. That turned out to be US $20 million to help Osisko Development Corp, our sister company, buy an asset in Utah, which is very exciting. I'll talk to you about it. And then the bigger deal was us deploying, between 100 US to 200 million US roughly of capital to help Mick McMullen, who you probably know, and his team acquire the Cobar or CSA mine from Glencore. So what we've always said is we don't need to do $1 billion of deals every year to show growth. We have a lot of growth organically, and we're still a size of company where we can find these pockets that are done without competition, because neither of those were in a process for us. We source them ourselves. We can do those deals and still show a lot of growth on top of the organic growth we have. So that's a bit of the higher level, the 10,000 foot view. Specifically on TINTIC, as I mentioned, something we're quite excited about. Sean over at Osisko Development is quite excited about as well. It's a very high grade camp. It's about 17,000 acres in Utah, so south of Rio Tinto's Bingham Canyon mine, which is a huge copper complex, obviously. And it was owned by two private sellers. The team found them, has been looking at this for years, and they stumbled into a very high grade pocket. Didn't quite know what it was. The Osisko Development team worked with them for about 9 months to figure it out, and ultimately decided to acquire the asset. When I say high grade, we're talking multiple ounces per ton is what they've been mining at. You don't get that anywhere in the world anymore. It's early days in terms of figuring out size and what it could be. But they're doing the work now. That transaction closed in Q1, early Q2, I guess it was. And we're looking forward to getting some production there. It is in small scale production. They'll ramp it up to something more meaningful. And so that was a nice one, certainly a nice one for us to get.
Yeah, and I mean, they published some PEA numbers, because I interviewed Sean, funny enough, yesterday about Osisko Development. And I think it's 236,000 ounces what they are planning as an average for 12-year mine life. Let's say starting mine life, yeah? So for you, with a 2.5% royalty on it, that could be 5,000-6,000 ounces easily then.
I think yes and no. What you're referring to might be the PA on Caribou, which is the British Columbia asset.
Oh, sorry, I mixed that up. That was my fault.
It's okay. We have a lot of things going on
That's
in the group, Jochen, so you can be forgiven. That's an exciting asset, and I think going forward, Caribou, which is multi-million ounces in BC, TINTIC or Trixie, which is super high grade in Utah. There's also the San Antonio, Mexico asset. So we're rich on assets within that company. We have a royalty or stream on all of them. So the group is continuing to grow in a lot of different ways.
Absolutely. No, but I meant Sean said also yesterday in the interview that for the future, they could really imagine 100 plus 100,000 ounce production. So that would be really nice for you guys. Absolutely. No, I mean, it is a fantastic asset, and you have your hands on, and that's also for your future growth, right?
It is, and it helps Osisko Development. They were able to raise a significant amount of capital to advance all their assets. We were diluted in OR down to 44-45% of that company, which I think is in everybody's best interest as well. That continued separation of the royalty business from the operator business. And so all of that's good news. And then just more importantly, we're excited about the asset. It's a camp. They've only scratched the surface at it. The private companies did a phenomenal job, to their credit. They just were starved of capital and needed a bit of a bench strength on the team. Both of those things come with the Osisko group. So it's a nice one to tuck in for sure.
Super. You touched already on CSA in Australia. I mean, Australia is also a fantastic mining jurisdiction. Mick McMullen, whom I know, also interviewed him already in the last years, and I think that is a great thing what you have done there, because there is also a potential copper stream with it. What might be the future with that?
So that's why I gave you a range of how much we've committed to that. We bought a silver stream. Well, first off, we helped Mick and his team, or helping them, I should say, acquire that asset. They paid about $1.1 billion US to buy it, or they will, from Glencore. This is a high grade, and again, grade, I guess there's some consistency in what we did in Q1. Also very high grade. It's one of Australia's highest grade copper mines. They've been mining copper since the 60s. Currently, they've been doing it at about 4% copper. We gave them $90 million US to buy the silver off of that mine, or will do that. And we also have a bit of an accordion feature where if we and they agree, we can fund a copper stream as well, and that will depend on how much capital they end up needing to affect the transaction. So that will get figured out here in the coming weeks and months. But great team, high grade asset, long history of reserve replacement. For instance, in the last 12 years, the mine has replaced every single ton and pound of copper that they've mined over that period, and we expect that to continue for a very long time. And when we looked at Jochen, it ticked every single one of our boxes. In production in Australia, which is a great jurisdiction, one that we didn't have as much exposure to as we would like. Great team, long life, getting longer, upside potential in terms of throughput, just a lot of low-hanging fruit, and the natural benefits that come from an asset being non-core to a $70-80 billion Glencore to singular and completely core to Mick and his team. And also, like TINTIC, this isn't one that we won by being the highest bidder. I've often said, yes, sometimes we look at things in a process, but you can't just be the highest bidder in a deep field of royalty companies and call that a business model. You have to be able to find these things on your own. Yeah. So we've been supporting Mick and his team since October when they've been looking at this story, and happy to give them a fair deal, something that works for everybody, but not necessarily be the highest bidder in a process.
Yeah, it's always a good thing when everybody's happy, right?
Exactly, and we look forward to that transaction closing in Q3. It's a bit longer because it's a de-SPACing process, so they have to go through all those hoops. But hopefully that's something that will get closed off in Q3. When we started talking, you touched on the equity financing that we did in mid-March. That was the reason for it. In March, in Q1, we announced through TINTIC and CSA up to $250 million US of investment. And we raised $250 million US to fund those deals once they come to fruition. And so that's what kept us busy in Q1. It was our most active quarter since I've been in the company from a royalties perspective. And it shows you that, even in a competitive market, there's still some interesting things we can do.
Absolutely. What I also saw in your presentation or also in our press releases was that the Renard stream was reactivated at the end of April already. So that means with Stoneway Diamonds Canada, it works again, right?
It does, and kind of went under the radar, to be honest, but that's quite good news for us, frankly. It's one of those assets, one of two really, that we were looking to restart. It went into trouble essentially from a diamond price perspective. Really, I guess it was late 2019, and then when it came out of the COVID care and maintenance period, things started to get better. So the operators there have done a good job of kind of containing their costs. At the same time, the diamond market has really exploded. They used to get about $70 a carat US if they were lucky. It's gone, more recently it's been in the $120s, $130 a carat. So it's a lot of extra margin. And what we did with that asset when we kind of brought it in was just to protect it. We turned the stream off for a period of time to help them. Now the stream is back on, as you mentioned, as of the end of April. So Q2 will be the first time that we get those GEOs again, those diamonds turned into GEOs. It's a big step forward for us.
Absolutely. So what happened with the carat price for diamonds? Do you think that could happen soon with the silver price?
Look, I think both silver and gold, we like both commodities. That's our core. Obviously, we're 75% gold, 25% silver, basically. I think both are primed to do well. Which one will do better? I don't know. I don't have that crystal ball, but I think silver gets a little bit beaten down as having more industrial applications, but ultimately I think there's scarcity in both, in particular on the silver side. It's tough to find a good silver mine out there. It's tough to even find a lot of silver byproduct in the base metal space. So I think there's good news in store for both metals.
Absolutely. So finally, let's talk about your growth profile, because I think this is really impressive. You had approximately 80,000 GEOs in 2021. You are predicting between 90 and 95,000 for this year. So How does it look like? Half year is almost over. You're satisfied?
Well, look, yeah, well, I think we're doing quite well. We haven't released our Q2 numbers. Obviously, Q2 is not done yet, so all we have to go by is Q1. You're right, 80,000 geos, almost exactly last year, 90 to 95. Importantly, that growth is not, we have a couple of newer assets that are coming on, but really it's existing assets getting bigger. So it's the continued ramp up at Eagle in the Yukon, which you know well. It's an expansion at Mantos, which Capstone Copper is running now. That's going on. They're moving forward. That's happening as we speak. It's the Renard stream coming back on, which it now is. So I think we're in good shape. Q1 was a little bit lighter than anyone would have expected or would have preferred, but kind of expected for us. That ramp up is going on all year. So our Q2 will be stronger. Our Q3, Q4 will be stronger for some pretty obvious reasons. One is, as I mentioned in Q1, Renard wasn't activated. It is in Q2, so that's binary. You'll know better than most people that at Eagle in the winter, they do less. They don't stack ore. There's always a seasonal impact there. And then Mantos, the expansion is tying in as we speak. So they're going to just continue to produce more silver for us as the year progresses. So we're happy with where we are. We think we'll have a very strong Q2 and then continuing that into the second half of the year. I will say this, just taking a step back again, and in Q1, it wasn't just for us. I think what you saw in the sector is the mining sector, our mining partners, our operators, all had a bit of a pullback. I think everyone was dealing with COVID, step up, whether it was Omicron or something else, absenteeism, quarantining as a result. So everyone kind of had their foot off the gas a little bit in Q1. For us, it's not a big deal. Those ounces, if they don't get produced in Q1, they get produced in Q2. It's just a time value money thing. But I think on the operator side, they also have to deal with the cost impacts of that. So we feel like we're in great shape. We look forward to a strong rest of the year. And the growth story, as you say, is very much intact. And it's not a one-year growth story, Jochen. We would have put out a five-year outlook in February, where we see production kind of continuing to grow 10 to 12% per annum for the next 5 years over that time horizon. So that's a huge amount of growth compounded for a company our size. More assets coming on after that as well in the back half of the decade. So we think we'll be able to continue a very high level of growth all decade on assets that we already own, on assets that we bought and paid for in a low gold price environment. So we're in fantastic shape.
Absolutely. No, I see that here also by 2026, you plan 130,000 to 140,000 geos, which is really a beautiful amount. But the question is also to me now, like in the environment we were talking about when we started the interview, what is the exploration? What does it look like now with your companies? Meaning, are they drilling more meters to back, let's say, the future production?
Yeah, I mean, that's the beauty of our company right now. It's the beauty of the model when it works well is it's not a depleting business. It's not it's not a business that we necessarily have to continue to spend money on to avoid it being depleting. Our partners are doing that work for us. So you probably would have heard me say that we had 4 years in a row where our partners drilled 1 million meters on our properties. That was true until 2020. In 2021, it went up to over 1.4 million meters. Which is a huge amount of drilling. More than Newmont does, Barrick does, Agnico does in any given year in their whole company. So that's an amazing amount of upside that we pay zero for. And more important than the work, it's the output. So we're seeing our assets being grown by our partners in leaps and bounds. You mentioned the 80,000 ounces that was generated off of our properties for us last year. That was more than fully replaced in the reserve category. So our partners added more reserves in the P&P category. If you look at all categories, they replaced that 80,000 ounces about eightfold. So it's a business that has, the base is continuing to grow. The development assets that come on top of that will continue to grow it as well. And then if we find opportunities to do smart things, accretive transactions to continue to add to that, you can certainly see how that snowball starts to go downhill and gather momentum.
And getting bigger for an avalanche.
Exactly.
Fantastic. Super.
Just to give you a Swiss analogy, yes.
Yeah, I love it. Thank God it's summer here. Fantastic.
Yeah.
Super. Sandeep, thank you very much for the update. It was almost 20 minutes. Fantastic. Love to talk to you all the time. And yeah, wish you a great PDAC, and yeah, keep it going, and hope to talk to you soon.
Yeah, we'll see you in person in not too long. Thanks so much, Jochen. Take care.
Thank you very much, Sandeep. Yeah, ladies and gentlemen, that was PDAC 2022 Commodity TV with Osisko, Gold Royalties, and Sandeep Singh, the CEO. You heard it. Company is in perfect shape. Everything goes the right way. The future is backed by exploration. The company has money in the bank. They have done fantastic deals. The diamonds are back in business. They are working now also in Australia, backing up Canada, in the US. It is fantastic. Great team, great portfolio, and great risk diversification. And don't forget, they pay a quarterly dividend, because that's also something what we really like. So you should really consider to have a look at Osisko Gold Royalties. Thanks for watching us, and bye-bye from Switzerland.